Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for you. And we'll go through some ideas in that regard, really our order window and some other tools that are built in to the web trader and our app make risk management quite a bit easier, even for experienced traders. It simplifies things. And so we'll go over those features, perhaps within some trade ideas. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our web trader by logging in the upper right corner. This allows you to trade on both MT4 and MT5 accounts from one location. And also our app is the same with the same advanced trading tools. So if you go to your major app stores for your mobile device, you'll find the AvaTrade app, which has the signals, the market buzz, the advanced economic calendar, all of those same trading tools that we'll see in the web trader. So if we log in here in the upper right corner from the main website, we'll be in the web trader platform. And now today is a fundamental news focus, and we probably want to talk a little bit about yesterday's fundamental news because it's pertinent to some of the sentiment today. Couple main things from yesterday. Out of the UK in particular, there was data that came in worse than expected, kind of across the board, whether it was growth numbers or industrial production numbers, GDP. There were a slew of data that came in that could be considered bearish for the pound or for the UK market in general. And, you know, out of the US, there's been the hopes that things would slow down because of the high inflation that has gradually been coming down. The US raised interest rates for the purpose of trying to bring inflation down, as did other countries, by the way. And so rate decreases now have somewhat become the norm for many regions. And now the US is deemed to likely be headed towards rate cuts and maybe the first rate cut starting next week when the rate decision comes in out of the US. And so yesterday's data was some inflationary data, CPI data that came in particular was being looked at, and it was mixed. Some of it came in as expected, a drop in inflationary numbers for the CPI, but the core inflation actually came in a tick higher than expected, which created a bit of a scare on the markets, and we saw quite a sell-off in the equities, the stocks. And so the major indices had fallen off quite a bit. I think the Dow Jones was down near 800 points at one time yesterday. And then they came roaring back because one of the head guys in the video was at a conference and kind of alluded to the fact that they had such high demand still for their chips that you know, their buyers were almost bargaining and fighting over the remaining chips because they're selling so quickly. And they have fears that they can't produce them even fast enough for all the demand that they have. And that information leaking out caused the market to swing as NVIDIA jumped 7-8% in a short period of time. And we went from large lows to a decent rise in the US indices in particular. And so that was a large market swing. The general global dynamic was you know, fear that inflation is sticky in the US while the jobs numbers are still poor in the US. And that still exists today, the fear of that. But the excitement from NVIDIA kind of reversed that, at least temporarily anyways, yesterday. So we're kind of in a mixed bag fundamentally with fears of recession not being low enough in the US, while there being fears of recessionary data coming in the jobs market, etc., out of the US as well. Also, fears of a slowdown in regions like the UK, the European Union, because of data coming in worse than expected, in particular out of the UK yesterday. And so there's a bit of apprehension today, a bit of fear that's there. And as we saw yesterday, it doesn't take much to create a big swing one direction or the other. And that's kind of where we're at right now. The markets are touchy, is maybe a way to put it. Okay, so then as we go to look at the economic calendar, for example, for, well, what announcements are coming today? They had such a big effect yesterday until the NVIDIA news leaked. What might happen today? And so we can look in the discovery section and go and check out the economic calendar. Again, if you've used economic calendars in the past, then you're familiar with the basic columns, the previous numbers. The forecast for the current announcements are in this column. And then as the time comes, the actual numbers are in this column. But what this economic calendar lends to itself are advanced tools over here to analyze how did the markets move when the last numbers came in from this same announcement. Which direction was the movement? How large was the movement on different currency pairings in relation to how the data came in as expected, higher than expected, less than expected? We can look and analyze that data using the volatility tool here. Okay, so the rate decision, kind of a big deal, but as we'll see when we look at the data, the expected numbers almost always come in as expected when it comes to rate decisions. Okay, so if we're expecting a 0.25% cut, what we'll see when we look at the past data, well, then that's typically what happens. Now, if it doesn't, then you could get a really big reaction, right? If for some reason they kept the interest rate at 4.25 when it's expected to drop, that could be maybe bullish for the euro. Keeping the interest rate higher makes the money more valuable, more expensive to get, and it's worth more because you gain more in interest by holding it, or by lending it, I should say. Now, if the interest rate came in lower than expected, if they cut it 0.5% instead of 0.25%, then you might see the opposite. That could be bearish on the euro. But let's look and see what the data shows us rather than kind of guessing on what has happened in the past. So if we look at this rate decision in the past, what we will see, and we can put any currency pairing we want that involves, in this case, the euro, okay? And we can pick time frames after the past announcements that we want to analyze. I'll leave it on 4 hours, and we can qualify the events, okay? How many came in above forecast, meaning the interest rate came in with the rate decision higher than expected? None in the past year. How many came in lower than expected, meaning they are expecting a 0.25% decrease with this? How many times might it come in lower than that? With a 0.5% decrease, for example. Below forecast has not happened in the past year. It does happen, don't get me wrong, but not very often. And we see that in the numbers. So if this comes in, as it usually does, matching the forecast, what can we expect from the movement on the charts? And that, to me, is not convincing data to tell me which way I would want to trade. It's almost half the time up, half the time down, same distances up compared to down, same amount of momentum in each direction. So it almost looks like anyone's guess which way will it go if it comes in matching the forecast. I know it shows 63% down to 33% up, but that's only one difference. If this came in one less down, then we'd have 4-4. Okay, so one data point difference and it's 50-50. And we see, in addition to that, the movement distances are equal in each direction. There's no major, it would be different if it was 63% down and the downward movements were larger than the upward movements. Then I'd say, okay, that seems more significant. But if we look at these movements, they look too similar in both directions. It's almost like it doesn't matter with the strength of the euro. If this comes in matching the forecast, there's not a big effect. Like I said, if it came in above or below what was expected, then we'd probably see larger movements, more significant movements. So if I watch this rate decision, I'm not interested in trading based on this data if it comes in matching the forecast. Maybe you are. Everyone's different, but these movements don't convince me of a large trend in one direction or the other when it comes in matching the forecast. Okay, so this one, I'd be waiting to see if it comes in above or below expectation, and then you don't have data for that. But in a general sense, if the interest rate was kept the same, that would probably be bullish for the euro. The euro might strengthen. If it was lowered more than expected to say 3.75, that would probably be bearish for the euro, meaning it might weaken and drop against the USD, for example. Okay, but sometimes you use this tool and it convinces you that you're not interested in trading on an announcement, and that's okay too. All right. And if we check the deposit facility rate, it's the same idea. It's expected to drop 0.25%. If we look at the data, it will show every time in the data set from the history, it's come in as expected, and it's the same sort of movements we saw with this one. Okay, so these two are at the same time and almost one in the same. So let's skip down. Maybe there's something else that is more exciting, that maybe more often brings more significant movements. If we look at initial jobless claims, there's been a big focus out of the US on the jobs numbers. Why? Because it was the last sticking point in the US economy to give ground with the high interest rates. The high interest rates were bringing down, production numbers. They were bringing down inflationary data, from 10% inflation to around 2.5% inflation now. Not where they want it, below 2%, but it's come down. The numbers that were staying strong for the longest time still, though, were the jobs numbers. The unemployment rate was still very low. The hiring numbers were still large. Only in the past month or so, those finally showed cracks in the lining. And so there's a focus now on how bad is the job situation now in the US, because the non-farm payroll numbers were bad, worse than expected the last 2 months in a row now. The unemployment rate went up unexpectedly, not this last time, but the time before in the US. And jobless claims numbers have been creeping up a bit higher than expected. We see another expected increase in jobless claims. Okay, this is one of those numbers. The higher it is, the worse it is. So worse than expected is if it's higher than 231,000 jobless claims. So we see this number has been creeping up. It's expected to go up with today's numbers, and if it comes in even higher than that, again, there'd be fear maybe on the markets that, well, the job situation's not good in the US. And if that's the type of numbers that come in, let's see what has happened in the past with those numbers. And so, again, we can pick different currency pairings. In this case, any against the USD. Euro USD tends to be a highly traded instrument, so I'll leave it on that. Good volume, good movements on the charts. 4 hours after event, we can pick different time frames, and we might do that now to test different times. And then let's say if this comes in above forecast, meaning bad news, showing more jobless claims than expected. Okay, it's only happened 3 times. Twice it went up, once it went down. Not a lot of data points, okay? So being 2-to-1 doesn't convince me, but the fact that it is 2-to-1 in the upside, and along with it, look at the size of the rise compared to the size of the drop. One was neutral, barely went up, but the comparison of the other two, much larger upward movement compared to downward movement. So not only is the percentage leaning up compared to down, but also now the size of the movement is up. So in this case, jobless claims being worse than expected, higher than expected, the USD weakened. Okay, pretty significantly compared to the downward movement the one time. Okay, so the odds of staying flat or rising are 2-to-1, and the rise was much larger than the drop the one time that it dropped. So I would preferably want more data points, but this is the direction that we only had 3 times in the past year or so in the recent history that they came in above forecast. Okay, but this trends to the USD weakening if there are jobless claims that are higher than expected. And that might make sense in your mind too. That might confirm what you already think, meaning bad economic news, USD weakens with the idea that they're more likely to lower interest rates then, okay? Because they're just itching to lower those interest rates back down in the US, and they're waiting for bad enough data to confirm that it's time to lower interest rates, okay? Inflation numbers yesterday came down somewhat nicely, a little mixed, but somewhat nicely yesterday out of the US with the CPI data. Now, if the jobless claims come in with bad news, that'll just increase the likelihood that people think a rate cut is more assured in the US, okay? And we'll find out next week. The FOMC rate decision is next Wednesday out of the US. So what if this goes the other way? What if it comes in below forecast? The exact opposite, right? Now it's down 63% of the time to up 38. Couple more times down than up. Again, it would only take one of these data points being different. It would be 50-50. So again, I'd rather see 6-2 rather than 5-3. But it's somewhat significant. The percentage here drops more than it goes up. And in this case, the size of the movement was pretty consistent down. Okay, none of them were flat. The downward movements are all significant, whereas the upward movement only had one that was somewhat large, and these other two were kind of small, okay, especially this one. It almost only went up twice. This one stayed flat, and it went down pretty significantly 5 times. Okay, so there seems to be an impact here in both directions, and many times that convinces you more with an announcement when you see if it comes in one way, the trend is in one direction, and if the announcement comes in the other way, it's in the opposite direction. And that's what we see here, trending down more often than not. If this comes in below forecast, trending up with more momentum if it comes in above forecast, okay? And when that matches what you think should happen anyways from a fundamental perspective, then that can just convince, the data can help convince you of what you already thought if it came in above forecast, below forecast, in terms of the direction you thought the currency pairing should move, okay? And you can start to look and say, well, if this comes in below forecast and the USD strengthens after 4 hours, well, what happened after maybe 5 minutes? So, it's over 41 pips after 4 hours. That's the range movement. It's pretty significant. If after 5 minutes it already went 40 pips, then might not have time to trade. But you see after 5 minutes, the range movement was only 17 pips. Okay, 17, 18 pips. So you still had the majority of that 40-something pips left to go, even after the first 5 minutes. And it shouldn't even take you 5 minutes to place a trade if you're convinced based on the announcement which way to trade. And some of these you could have caught on a spike, even in the first 5 minutes before, after 4 hours, the majority of them came down. Okay, so pretty strong tool, pretty powerful tool that can help you decide based on past data what direction you might want to trade with these different announcements. Okay, and you can go through and look on Saturday, Sunday at the upcoming week. You can look at maybe 10, 12, 15 different announcements that are ranked high level that you think will have good movement, and see which ones have the best statistics from the past to help you predict what you think will happen in the future. And before the week starts, you can already have mapped out on your schedule which announcements you might be available to watch that you're interested in potentially trading on. Okay, and that's just one tool on our platform that can help you trade with one strategy. Okay, and so this could be part of your list of trading strategies that you might choose to use. Okay, so it's one idea of a trading strategy. Now, what else do we find on the platform that could help you decide what to trade on from a fundamental perspective, meaning from the news? We can take a look at actual news articles. So if we go to a tool like the Market Buzz, for any instrument, we can look up, well, what's going on with this instrument? And by default, it started on the stocks, but we can look at the other categories as well, commodities, indices, etc., currency pairings even. So maybe you didn't know what was going on with NVIDIA yesterday. And you take a look and see, well, what can I find out about NVIDIA? And this is pretty interesting. The technical prediction is that the price is going to fall significantly. 31.4% price may fall is the trend analysis. And if you click on the trend analysis, it gives you the technical breakdown. If it goes above 119, then they say, okay, it's no longer a sell signal. But as long as it stays below what they call the pivot line here, 119, the signal is to sell and to take profit down maybe near 85 or lower, okay, between 85 and 78. And that's based on technical analysis, but also on what's happening fundamentally, okay? So yesterday, NVIDIA spiked up because one of the top guys at NVIDIA was at a conference and said some positive things about demand for their chips. And so right away, the market swung back up because NVIDIA jumped like 7-8%, which I already mentioned earlier in this session. And as the NVIDIA went up, the rest of the tech stocks followed for the most part, and then the rest of the market in general followed. But that was kind of a temporary excitement based on one company. The greater prediction for NVIDIA still shows expected drop, and that's more based on large-scale macroeconomic things that are going on potentially. Okay, specifically slowdown in the U.S. economy, slowdown maybe other places. We mentioned the UK and maybe even into China. Okay, so there's still this signal saying sell. You might say, well, what about the fundamentals? This is a technical prediction. What do the fundamentals say? And so we can start to look at articles. And here it says NVIDIA powers rebound. That's what we just talked about, by the way. The rebound yesterday after the market was selling. NVIDIA powers rebound, but this key resistance could cap further gains. So this article, if you want to read, well, what are they talking about? There's a resistance that could stop maybe further gains from occurring. That would agree with the signal then. The signal expects a drop. This article says maybe NVIDIA will have trouble climbing much further. And so you can read a little synopsis of the article, or you can read the entire article. And in this case, it's taking you to investing.com. And here's the article you could read through. There's a breakdown of the reasoning behind why they believe there might be a cap that's near to NVIDIA's rise that they had yesterday. So, and that's just one article. You can go through, try and find more articles that might help convince you as to which way a particular instrument might move, okay? So, and you might find mixed information, or you might find information that leans in one direction, and that might help convince you on what to do. Maybe that would convince you to either agree or not agree with that technical trend prediction. And you don't always have to look at the instrument that's trending the most. So NVIDIA's got the biggest circle here because it has the most mentions online that were found in articles and social media, etc. But we could look at something that's not trending as much. The banking sector has been talked about as a place where if the tech sector maybe is overbought and there's fear that it'll pull back. I mean, the prediction on NVIDIA there was 31% drop, something like that expected potentially. So where do you go with your money if you've been riding the tech stocks up so much and you're afraid they might pull back? A lot have said, well, maybe the banking sector is a place to move to. So maybe you're interested in looking at some of these stocks or instruments that are trending maybe a little less, but maybe you still have interest in reading what's going on with them. And so you can use the market buzz to find out price predictions. This one actually is expected to drop also, but not nearly as much, I should say, as NVIDIA. Expected a 10% drop. Here's the technical breakdown. As long as it's below 225.50, they say it's still a sell signal. If it breaks above that price, then they say look for further upside up here. Okay. but you can read the articles and see what's going on with JP Morgan Chase and Company. And so you can start to read specific articles about this bank to see what's going on. Here it says JP Morgan stock drops after President Pinto's cautious comments. Well, it doesn't sound good. Their own president is talking cautiously about the company and maybe the growth moving forward. So you might choose to read an article like this to see what it is their president was talking about being cautious about, okay? And so you don't get more inside the company than maybe the company's president's view on their own company. So to read articles like this really could help you to decide from a fundamental news perspective, do I agree with this technical signal that's saying the price might drop 10% or so? So you start to combine different tools as a strategy as well. And so, you know, the economic calendar was one strategy. This is maybe another strategy as part of your weekly plan to find trades that you're interested in. And so maybe part of my rule is I want the trend analysis to be on my side in the direction that the fundamental news also makes me feel like it should go. If the prediction was this price should rise in the trend analysis, but the articles I read are telling me the opposite, then I'd probably sit that trade out until more of the information agrees in the same direction. Okay, that's just part of a strategy concept to try and put pieces of information together to become more confident in the trade before you place the trade. Okay, so where else can we find fundamental news? There's a news feed. Okay, this basically, the news feed here puts together all of the news that's out there. It might be recent economic announcements or upcoming announcements will be talked about here. Recent articles, recent headlines might be included in what they talk about in this news feed. It's all kind of summarized together to make it simpler just to look in one place and find what's the most recent news on a particular instrument. And based on the news, there are recommendations below on instruments that might be affected by that news. Okay, so everything that's talked about here, it's expected that maybe that news could affect the movement, in particular on gold and crude oil and gold futures contracts. Okay, it doesn't mean it wouldn't affect other instruments as well, but there's some suggestions down there for each bit of news in this news feed. Okay, and the other thing is there are signals coming in that if you already understand the fundamentals, you've already done some reading, and maybe you feel like there's reason, for example, for the USD to be stronger than the pound. Well, why? Because the news yesterday out of Great Britain was weaker than expected, and the news out of the US was at expectation or even a little stronger than expected. Okay, and so I see a question that popped up. Okay, you found it. All right, good. So you might then have in your mind, separate from the announcements that are coming up in a little while today, you might already feel like there's reason for the pound to be weak and the USD to be strong based on yesterday's announcements. So you might be looking to get in and then out before today's announcements, okay? Because today's announcements could skew the momentum. But as we look at this, you could be aware that this movement is reaching a resistance level. You see over here, this was support in the past, where the price hit and went up, hit and went up, hit, and then broke yesterday. This was all the fear yesterday. USD strengthened when the data came in a little hot on the CPI data, the core CPI data out of the US. USD strengthened and down went the pound, and it went down pretty easily because the pound also had announcements that were worse than expected. So that fueled this drop. Then all the fear kind of came out and everything bounced back up. But here we are back at that broken support level, deciding, is it going to go above that and climb, or is it going to respect the resistance and drop? Okay, and it almost feels as you look at this chart that it's in a wait and see mode, waiting to see, well, what's the data that comes out today going to look like? Okay, and so this is kind of the situation that a purely technical trader might sell on this right now because it's sitting at the resistance. A fundamental trader would say, but there's big news coming out about jobless claims in the US soon, and I might sell on this resistance level and sell from a technical perspective, but when that news comes out in an hour or two, if it comes out in a way that weakens the USD, then this resistance could break and up would go the pound, potentially. Okay, so being aware of upcoming fundamental news is important, just as important as the news that already occurred. So if I was trading this morning, earlier today, maybe 4 or 5 hours back, okay, these are half-hour candles, so 4 or 5 hours back is like here. Okay, if I was 5, 6 hours back and this was sitting where it is now, like here, I would have respected this resistance and said, you know what? I don't think it'll break until we get to those announcements. So I have time to sell off of yesterday's news where the pound data came in weak and the USD data came in strong. And so I would have expected this drop earlier in the day, and that's what it did. When it hit the resistance, it pushed back down. Why? Because there's reason for the pound to be weak and the USD to be stronger from yesterday's announcements. Now that it's at this resistance, the same situation exists, and it is trying to drop. But understand, as we get closer to those announcements, people will be looking forward instead of back potentially, waiting for those new numbers to come out. And so your window here is smaller to take advantage of this resistance level. You see it's pushing down again. So this would be more of a scalp move if you were trying to take a sell here off of this resistance before the new announcements come, okay? Understand the US announcements, if we look at the calendar, are not that far off. So my point here in looking at the chart and doing the technical analysis is be aware, no matter how good the technical setup looks, in this case, great resistance level, and it looks like it's starting to drop, be aware of upcoming fundamental news. And in this case, it's in about 2 hours time coming out of the US. PPI data, jobless claims data, there'll be a big focus on this today, just like it was yesterday on the US data, okay? So you've got a couple hours time to trade off of that resistance level still, but the closer you get to new information, the more careful you want to be about trusting support and resistance levels that could be broken potentially with that new data release that could be coming soon. Okay, but you see the power of this resistance level once here, and again here starting to push down. Again, smaller window of time now to take advantage of this second drop off of the resistance. But we see it is reacting to yesterday's news still, weak data out of Great Britain, stronger data out of the US. Okay, for the time being, till we inch closer and closer to those live announcements. Now, what we also could look at are different categories. So if we're looking at something like gold, we can think about, first of all, the effect of the US dollar strength. This is paired against the USD, and also the effect that, you know, gold is a safe haven when there are fears of inflation, fears of recession. There are multiple reasons why gold maybe could look attractive depending on how the data comes in today. Okay, if the jobless claims come in really bad, maybe they're way higher than expected, and maybe the PPI data, the producer price index data that's coming in out of the US, if that comes in maybe higher than expected, showing inflation is still there, then that could create, either of those situations could create enough fear to make a safe haven like gold look attractive. okay? And the opposite could be true as well if the data comes in the other way. So what we see here then is a movement, and we might look better on larger candles to see the support and resistance levels. And here I drew these from last week and they still hold. And so from a technical perspective, this is what we call ranging. So ranging pattern where you have a support level below, right here. This price seems to be holding multiple times, tested multiple times over the course of several days. And then the upper level also of resistance, holding, 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 again and again and again. So this is a ranging pattern, and it will range until something causes it to have enough momentum to break that range. So if the data comes in unimpressive, close to expectation or at expectation, and you don't see much volatility from the movements, you might think fundamentally that tells you the ranging pattern might continue because there's not enough big economic fundamental news. If the news comes in kind of boring and the data comes in as expected, maybe you trust this resistance level and sell on gold with your stop loss above the resistance. In this case, it'd be a small risk, much larger potential profit to the support level below that it's been ranging down to. Now, the opposite, if it comes in that the data is way different than expected, and fundamentally it creates a lot of fear on the markets, then you start thinking, okay, I'll put a pending order above the resistance, and if it breaks out, then I'll buy. Okay, and those are two opposite strategies based on how does the fundamental news come in today. Does it come in creating lots of fear and excitement, or does it come in kind of flat? And you wait for the data to come in before you decide, will I do a breakout strategy with a pending order above or below the range, waiting for a breakout to make a trade? Or do I trade on the ranging movement, in this case to sell from the top of this range if I believe there's nothing to cause enough momentum to break the all-time highs up here or to break the support down here? Okay, so just some ideas about the fundamental news helping you determine which technical strategy you want to employ. Ranging patterns tend to occur when the news isn't big enough, isn't surprising enough to break the range. And breakthrough movements tend to occur when the news is unexpected, dramatic, etc. Okay, so keep that in mind when you're thinking about what technical strategy to trade on, whether it be ranging or breakout strategies above or below. Keep in mind what was the fundamental news, and does that make it more likely to, in this case, continue ranging or break out? Okay. All right, everybody, I think this is a good place to stop. We went over, I don't know, 4 or 5 different strategy concepts that you can use, some of which were strongly leaning towards fundamental news. Others are mixing fundamental news and technical analysis together with the different tools that we have to be able to have a strategy that involves fundamental analysis, but in a more rounded way to be able to find entry points, exit points with your technicals as well. Okay, everybody, thank you for joining. Good luck with your trading the rest of the week, and we'll be back at it next week. Bye for now.